Your Social Security payment just landed in your bank account. You go to check it and it's not there. Or worse, it's there, but it's frozen. You can't touch it. You can't pay your rent. You can't buy groceries. You're sitting there wondering what happened, and no one is giving you a straight answer. That scenario is not made up. It is happening to real people right now, and there is a new banking rule quietly taking effect across the United States that could put your Social Security SSI or SSDI payments directly in the crosshairs. And the worst part, most people won't find out about it until it's already too late. So if you receive any kind of federal benefit payment, Social Security retirement, SSI, SSDI, VA benefits, anything deposited directly into your bank account, please stay with me for the next few minutes because what I'm about to share with you could protect your money, your benefits, and your peace of mind. Let's start with what's actually going on. Banks across the country are now operating under a new set of compliance rules that give them significantly more power to flag, freeze, or delay deposits that they consider suspicious or out of the ordinary. Now, you might be thinking, well, that's for criminals and fraudsters, not for me. And that's exactly what most people think, right up until it happens to them. Here's the problem. These automated systems that banks use don't think like you and I do. They don't look at your account and say, oh, this is Margaret. She's 72. She's been a customer for 30 years. Her Social Security comes in on the second Wednesday of every month. No. These are algorithms. They look for patterns. And when something triggers a flag, even something completely innocent, the system can act before any human being ever reviews your account. That means your money can be frozen automatically. No phone call. No warning letter, no explanation, just gone from your access, sometimes for days, sometimes longer. Now, let me tell you exactly what triggered this change and why it's affecting seniors more than almost any other group. Over the past couple of years, federal banking regulators, including the Office of the Comptroller of the Currency and the Financial Crimes Enforcement Network, which most people know as FinCEN, have pushed banks to strengthen what they call Know Your Customer protocols and suspicious activity monitoring. The idea behind it is legitimate. They want to catch elder financial abuse, money laundering, and fraud. And elder financial abuse is a real problem. Seniors lose billions of dollars every year to scammers and predatory schemes. But here's where things get serious. In trying to protect seniors from fraud, these new rules have created a system that sometimes treats seniors themselves as the suspicious party. The very people these rules are supposed to protect are getting caught in the net. Banks are now required to flag accounts showing certain activity patterns. And some of those patterns are things that completely normal, law-abiding seniors do all the time. Things like receiving regular deposits from the federal government, making frequent small cash withdrawals, sending money to family members, paying bills through third parties, using a joint account with an adult child. Every single one of those activities can now trigger a review under the new compliance framework. And when a review gets triggered, your account can be restricted while the bank investigates. During that time, even your protected federal benefits, the money the law says cannot be garnished or frozen for most debts, can become temporarily inaccessible. The bank isn't technically freezing your Social Security, they're freezing your account. And your Social Security just happens to be sitting in it. Most people don't realize this distinction matters enormously. Federal law, specifically the Electronic Fund Transfer Act and Treasury regulations, does protect Social Security and other federal benefit payments from being garnished by most creditors. But those protections have limits, and a bank compliance freeze is one of the situations where your access to that money can still be interrupted. Let me walk you through a real-world situation so this really hits home. Imagine a 68-year-old woman named Carol. She lives alone in Ohio. Every month, her Social Security retirement payment of $1,400 comes in through direct deposit. She also has her Medicare Part B premium automatically deducted. Her daughter, who lives 2 states away, occasionally transfers her a few $100s to help with expenses. Carol also withdraws $200 cash every week. She grew up in a time when cash was king, and old habits die hard. To Carol, this is just normal life. To a bank's automated compliance system, Carol's account has just triggered 3 separate red flags: regular incoming federal deposits, frequent structured cash withdrawals, incoming transfers from a third party. The system doesn't know Carol. It flags the account for review. Carol wakes up one morning and her debit card is declined at the pharmacy. She calls the bank. She's put on hold for 45 minutes. When she finally gets someone, they tell her the account is under review and they cannot provide details. She asks, how long? They say they can't say. Her Social Security money is sitting in that account. Her Medicare premium is about to be auto-deducted. Her electric bill is due in 2 days. That is the reality of what this rule change can mean for everyday seniors. And Carol's situation is not unique. Complaints to the Consumer Financial Protection Bureau from seniors experiencing unexpected account restrictions have increased significantly in the last 18 months. Now, let me tell you something that might actually surprise you. The banks are not entirely the bad guys here. They are stuck between 2 sets of federal requirements that are pulling in opposite directions. On one side, regulators are telling them to monitor more aggressively and report suspicious activity or face massive fines. On the other side, consumer protection laws say you cannot improperly deny access to federal benefit payments. Banks are walking a tightrope, and regular account holders are the ones losing their balance. But here's what you need to understand. And this is the part that most financial news outlets are completely glossing over. There are specific, concrete steps you can take right now to dramatically reduce your risk of being caught in this situation, and most of them take less than 30 minutes to do. The first and most important thing you can do is open a Direct Express card account if you don't already have one. Direct Express is a prepaid debit card program run by the U.S. Department of the Treasury specifically for people who receive federal benefit payments like Social Security, SSI, and SSDI. Here's why this matters. Money loaded onto a Direct Express card is not sitting in a regular bank account. It's not subject to the same internal bank compliance reviews that a checking or savings account is. It's a separate, federally administered system. A bank cannot freeze your Direct Express card as part of an internal account review the way they can freeze your checking account. For many seniors, especially those who don't have a lot of other financial complexity, this card can be a lifeline. Now, Direct Express is not perfect. It has its own fees for certain transactions, and it doesn't offer the full range of services a bank account does. But for your core federal benefit payment, having it land somewhere outside the reach of a bank freeze is a very smart move. The second thing you need to do is review who can access your account. If you have a joint account with an adult child or another family member, that is one of the triggers I mentioned earlier. I'm not saying close the account. I'm saying call your bank and make sure the account is properly documented. Make sure the bank has on file why there are multiple names on the account, what the relationship is, and that the activity is expected and authorized. A quick conversation with your bank's customer service team, or better yet, an in-person visit to your local branch, can add notes to your account that help flag it as lower risk. This leads me to something I really want you to do in the next week, if at all possible. Go into your bank in person. Talk to a real human being. Introduce yourself as a long-standing customer. Let them know that you receive Social Security direct deposits and that you occasionally make cash withdrawals or receive transfers from family. Ask them to note your account. Ask them what their process is if your account ever gets flagged. Get their name. Write it down. That human contact and account documentation can make a significant difference if your account ever gets reviewed. If you're finding this information helpful, and I hope you are, please take a quick second right now to tap the like button below this video. It genuinely helps us reach more seniors who need to hear this. And if you're not already subscribed to this channel, please do that now. We cover Social Security, Medicare, and benefits news specifically for people in your situation, and we do it in plain language. No jargon, no runaround, just straight answers. Now let's keep going, because there's more you need to know. The third thing I want to talk about is the 2-month rule. This is an actual legal protection that exists right now, and most people have never heard of it. Under Treasury Department rules, when a bank receives a garnishment order, that's when someone like a debt collector gets a court order to take money from your account, the bank is legally required to look back at the previous 2 months of deposits and identify any federal benefit payments that came in during that time. Those funds must be protected. The bank cannot hand them over to a debt collector. They have to leave at least 2 months' worth of your federal benefits untouched. Now here's the critical thing. This protection only works automatically if your federal benefits are going directly into that specific account. If you're transferring them from one account to another, or if you're mixing them with other funds in complicated ways, the bank's automated system may not correctly identify them as protected. So the rule is simple. Keep your federal benefit payments in a dedicated account. Ideally, one account where those deposits go and nothing else complicated is happening. Some financial advisors will even tell their senior clients to open a separate, simple checking account just for federal benefits. Their main account for everything else, bills, spending, transfers, and a secondary account that just receives the Social Security or SSDI deposit and is otherwise quiet. That separation makes the 2-month protection crystal clear and nearly impossible for any automated system to miss. Now, I want to address something that a lot of you are probably wondering. What if this has already happened to you? What if your account has already been restricted, or your payment was delayed, or you got some kind of notice from your bank that made no sense? First, don't panic. These situations are usually resolvable. But you need to act quickly and you need to know your rights. If your bank restricts your account and you believe your federal benefit payments are being improperly held, your first call should be to the bank's customer service line. Ask to speak to a supervisor. Use the words federal benefit payment clearly. Tell them you receive Social Security, or SSI or SSDI, whichever applies, and that this money is protected under Treasury regulations. Ask for the specific reason the account was flagged and how quickly it will be resolved. Get a reference number for the call. If the bank is not responsive or is giving you the runaround, your next call should be to the Consumer Financial Protection Bureau. Their number is 1-855-411-2372. They handle complaints against banks, and they have authority to investigate and push for resolution. Seniors are actually a protected class under CFPB guidelines, which means your complaint will get taken seriously. You can also contact your state's banking regulator. Every state has one. They have jurisdiction over state-chartered banks and sometimes even federally chartered ones when consumer harm is involved. And if your Social Security payment itself, not just your account, but the actual payment, is missing, late, or in question, that's a Social Security Administration issue, not a bank issue. Call the SSA directly at 1-800-772-1213. They can tell you exactly when your payment was released, where it was sent, and whether anything on their end triggered a delay. Here's something else that is flying under the radar right now. There's a relatively new program that several banks have been rolling out, quietly called Elder Financial Protection Accounts. These are special account designations where seniors can add what's called a trusted contact person. This is not a joint account holder. This person cannot access your money. But if the bank flags something suspicious on your account, they can reach out to that trusted contact to verify that you are okay and that the activity is authorized. It adds a human checkpoint before the bank takes any action. Ask your bank if they offer this. Not all of them do, and many that do haven't exactly been advertising it loudly. But for seniors living alone, or seniors whose family worries about them being targeted by scammers, this can be an incredible safety net. It protects you from actual fraud while also reducing the chance that the bank will freeze your account over legitimate activity without talking to someone who knows you first. Now let's talk about something that nobody wants to bring up, but I think is incredibly important. There is a difference between a bank account freeze and a Social Security benefit suspension. I want to make sure you understand both, because they require completely different responses. A bank account freeze is something the bank does. Your benefits are still being paid by the government. The money is just sitting somewhere you temporarily can't reach it. This is usually resolved in days to a couple of weeks, and the steps I just described will help you get through it. A Social Security benefit suspension is something the Social Security Administration does. This can happen for several reasons. If they believe you've had a change in income or living situation that affects your eligibility, if they think you've received an overpayment, if there's been a death in the family and records got crossed, or if someone reported a change in your circumstances that turned out to be incorrect or fraudulent, if your payment stops coming altogether and your bank account looks fine but there's just no deposit coming in, that's a different situation. The SSA has to notify you in writing before suspending benefits, except in very limited circumstances. If you receive such a notice or if you believe your benefits have been suspended without notice, you have the right to appeal. And here's the most important thing. If you appeal within 10 days of the date on the notice, you can often continue receiving payments while the appeal is being processed. That 10-day window is critical. Don't wait. Don't assume it'll resolve itself. Call the SSA immediately. Okay, I want to bring this all together because I know that's a lot of information and I want to make sure you leave this video with a clear picture. What's happening right now is a convergence of tightening bank regulations, more aggressive automated compliance systems, and an increase in elder financial fraud, all at the same time. The result is an environment where seniors who do everything right, who follow all the rules, who have been loyal bank customers for decades, are finding themselves unexpectedly locked out of their own money with little warning and little recourse in the moment. The good news is that this is not a hopeless situation. There are real, practical steps you can take. Open or consider a Direct Express account for your federal benefits. Keep your benefit deposits in a simple, dedicated account and don't overcomplicate it. Go visit your bank in person and have a real conversation about your account. Ask about trusted contact designations. Know the CFPB number and don't be afraid to use it. Understand the 2-month protection rule and make sure your direct deposits are set up in a way that makes it apply clearly. And if anything ever feels off with your actual Social Security payment, not just your bank account, but the payment itself, call the SSA right away and do not miss that 10-day appeal window. This is the kind of information that the financial industry should be proactively sharing with seniors. But they're not. And so we're here to do it instead. I want to leave you with this. You have worked your whole life for these benefits. You paid into Social Security for decades. You earned every single dollar that comes into your account every month. No algorithm, no compliance review, no banking regulation change should be able to take that security away from you without warning, without explanation, and without recourse. You deserve better than that. And you deserve to know exactly what your rights are so you can protect yourself. Share this video with someone you care about, a spouse, a sibling, a friend from church, a neighbor who lives alone. Because the people who need this information most are often the ones who are least likely to find it on their own. Stay informed, stay protected, and we'll see you in the next one.